In today's video, I'm going over the 5 stocks that you should buy and hold forever because there's a lot of companies out there that are really good that you could buy into now or tomorrow, and then you can hold them forever, and they're potentially going to have a lot of gains in the future. Now, obviously, I can't predict the future, so you guys are going to have to make your own call on whether or not you want to buy into these different companies. Obviously, do your own research. And remember that I'm not an expert, so take this advice for entertainment purposes only because I'm just some guy on the internet, but hopefully you guys can learn something new from this video. So now let's start talking about the 5 stocks to buy and hold forever. So the first company that made my list goes to Microsoft, and their ticker symbol is MSFT. And the reason that I really like them is because they're not just a computer manufacturer, they actually make all the software inside all of the PCs, and PCs are everywhere. These are personal computers, and they are in hospitals, schools, office buildings, and obviously inside of our homes, colleges, everywhere. And this is a big deal because they are all across the entire world, and I don't think Microsoft's going anywhere. They're also now into cloud products, so they have cloud storage as well as their software like Microsoft Word and Office and all that. Those are cloud-based now. So Microsoft, they are not going anywhere, and I am really proud to say that I would invest in them and hold them forever. Right now, Microsoft shares are trading for about $172 a piece, and that is really good considering the entire stock market just took a huge crash. And honestly, the last time Microsoft was at 172 was only back in January. And right now we're in April, so really we're not that far behind to getting back on track, and that is a really good sign. Microsoft has been through a lot of ups and through a lot of downs, so I'm not really concerned about where they're going because I know they're going to head in the right direction and they're always going to be around. And then keep in mind that Microsoft is a tech company that's also considered a growth stock, but the cool thing about them is that they've actually paid out a dividend since 2003, and right now it's at 1.23%, which is really good for a growth stock. Their current PE ratio is coming in right now at 29, which could indicate that the stock price is a little bit overvalued, but honestly, as far as the tech industry goes, it is fairly on par, considering Apple is at 21 right now as a PE ratio, so 29 really isn't that far behind. Now, one of the biggest reasons why I'm not concerned about their PE ratio is because if you actually look at the results of how they've done the last 5 years, they are doing very well. They've actually increased over 300% in just 5 years, and that is very, very good. Because if you can even double your money, meaning 100% in just 7 years, that's excellent. So when you're talking 300% in 5 years, that is beyond good, and this is definitely a good company that's growing very quickly. So when it comes to Microsoft, I feel like it's definitely a good company to invest in and hold forever. Now the question is, should you be buying in right now? That's something that you're going to have to ask yourself and do your own research on. But if they're just going to keep growing, obviously now is a good time to get in, or you can wait for another dip and then get in then. Now the next company that made my list goes to Disney, and their ticker symbol is DIS. And I realize that they are an entertainment company, but I don't think they're going anywhere because Disney is in everybody's homes and they are very well diversified, and I really don't feel like they have a lot of competition inside of their main hub because you've got all of their theme parks, you've got all of their movies and entertainment, and then they also own radio stations, different TV stations, all sorts of things like that. And then on top of that, you've got all the licensing for all of the different characters and things that they have. So they are very well diversified, and I feel like they are not getting hit when it comes to the big problems that other entertainment companies can run into. They also started recently competing with Netflix because they've got a streaming service called Disney Plus. And then on top of that, they've also got hotels and cruise lines that a lot of us don't really think of. And I do understand that those are being affected right now, but I don't think in the future that's going to make much of a difference for Disney because they are going to be stable and they're always going to be a good company to buy in and hold forever. Right now, shares of Disney are trading for about $103 a piece, and the last time they were that amount was late in 2018. So obviously we've lost a lot of gains in just a couple years, and I don't know if it's going to get worse or if it's going to start getting better, but I do know in the future I have confidence in them as a company that they are going to be growing. Disney's also paid out a dividend that goes all the way back to 1962, and they have been fairly consistent up until the late 90s when they did pull back a little bit on their dividend amounts. But overall, I feel like their dividend has been pretty stable, and I feel like they are going to continue that in the future. Their current dividend yield is currently 1.7%, which really isn't that great, and it's not really that bad. It's just kind of in the middle, but it is something good to have, especially when you're going to be holding them for a really long time. Their PE ratio is actually looking really good. It's almost at 17, and I feel like that's a very healthy PE ratio for the entertainment industry. But when you look at their 5-year track record, they're actually not doing that well, and it's not very exciting. It's at -3% right now. But I do have hope for them in the future. So right now is probably a good time to get into them, but obviously you're gonna have to do your own hard research before you make that decision. And obviously when you compare a 3% loss to a 300% gain when you're talking about Microsoft obviously looks a lot better, but just keep in mind we're only looking at a 5-year track record here, and a lot can change in the future, and there's been a lot of factors in the past that have made big differences as well. And really quick, if you guys are enjoying this video, can you please just give it a big thumbs up, because I would really appreciate that and it'll help the video spread out to more people. So thank you very much. I really do appreciate it. Now the next company on my list goes to Visa, and their ticker symbol is V on the stock exchange. And what I really like about them, they're obviously a credit card company, so they're in the financial sector. But what I really like about Visa is that they are the most diversified out of all the different credit cards because they're the most widely accepted. So throughout the world, if you're going to use your credit card, Visa is the most widely accepted. Obviously, MasterCard and Discover are also very well known. Amex is a little bit lower on that list, and they're all really good companies to invest with, but Visa I feel is the most diversified. Now obviously credit cards can make a lot of money from the interest that they charge their customers, but what a lot of us don't realize is that every single time you swipe your credit card, the merchant actually has to pay a fee of about 1 to 3%, and a large portion of that percentage actually goes to that credit card company. So when you're talking about microtransactions, billions of those are happening every single day. And so those credit card companies, they're going to be churning a lot of profit. And I don't think that's going anywhere in the future. So definitely investing in a credit card company, I think is a good idea to buy and hold forever. Shares of Visa are currently trading for about $166 a piece, and the last time they were that amount was in June of 2019, so we're really not that far behind from getting back on track, according to the entire stock market taking a huge crash lately. So this is really good, and I think they're just going to be doing better in the future. Visa's also paid out a dividend since 2008, so it really hasn't been around that long, and the yield is only 0.71% right now, but it is something, so at least they do have a dividend. Their PE ratio right now is coming in at 32, which is a little bit high, but I'm not too concerned about that because of the gains that they've been having over the last 5 years. Because when you really look at American Express, you're going to see that their PE ratio right now is coming in at a 12. But if you look at their 5-year track record, they've only gained 14%. And then when you look at Visa, you're looking at over 150%. So we're doing a lot better on Visa's end over the last 5 years as far as actual returns on your investment, and that's really what we want to be looking at. So obviously Visa's had some very good returns over the last 5 years, and that doesn't necessarily predict what they're going to do in the future, but I do have a lot of confidence in them, and I would say that they're for sure a good company to buy now and hold forever. And keep in mind that prices are always changing every day on the stock market. So whether you're talking about the PE ratio, the price per share, or even the dividend yield, those are always going to change every single day. So when you watch this video, a lot of these numbers can fluctuate quite a bit, but just keep in mind that as long as you look at the averages, those are going to give you a much better ballpark figure of how things are really going. And that's what I want you to focus in on, are the averages and not just what's happening day to day. Next on my list goes to Johnson & Johnson, and their ticker symbol is JNJ on the stock exchange. Now they are a very big deal because every time you shop at the grocery store, you're buying their products. So whether you were talking Tylenol, Band-Aid, a bunch of different baby products, Johnson & Johnson owns those brands, and so you are supporting that company. Now there's really not much competition in the grocery store because you're really just looking at a few different big companies that own all of the different brands that you're buying. And the cool thing here is that they are pretty much recession proof because we're always going to have to buy groceries, we're going to have to buy household supplies. Everything like that is always going to happen even during a recession. And so owning into one of these companies is a really good idea, and I'm supporting Johnson & Johnson for one of these companies that we want to support, invest in right now, and hold them forever. Their shares are currently trading at about $147 a piece, and that's actually really good because they got out of the dip very fast. So now we're just about back to normal, and it didn't take very long to get there. So honestly, I think we're on track to get things back to normal. They've also consistently paid out a dividend since 1962, and right now the dividend yield is coming in at 2.72%, so that is really good as far as a dividend's concerned, and they've been around for a really long time. And then on top of that, their current PE ratio is coming in at 25 right now, which is a little bit high, but it's not bad considering their biggest competitor, Procter & Gamble. Their current PE ratio is coming in at 68 right now. So when you compare 25 to 68, that's a lot better. And so Johnson & Johnson is looking better just from that data alone. Now, as far as their 5-year track record goes, it is looking okay right now. We're looking at about 39% in gains over the last 5 years, and Procter & Gamble is looking about the same. So honestly, 40% over 5 years, that's not bad. But I do have hope that they are going to compete in the future, and they're always going to be growing, and that's what we want to look for. We want to look for a company that we can invest in right now and hold forever, because we're not looking at the short term, which honestly 5 years could be considered short term, especially when you're looking so far into the future. Now, last on my list goes to Amazon, and their ticker symbol is AMZN on the stock exchange. And they are a big company when it comes to online retail and also web services that a lot of people don't talk about. So they are very well diversified. They've even got a bunch of different companies that they've acquired. They own Audible, they own Whole Foods. This is a very big company, and I don't think they're going anywhere. And that's why I think it's a good idea to invest in them and hold them forever. Right now, shares of Amazon are trading for over $2,300 a piece. So obviously, if you want to get into them, you are going to have quite a bit of cash. But just keep in mind that they have also made it through this entire dip. In fact, they're higher than they've ever been right now. And that is really incredible considering the rest of the stock market is really down and Amazon is higher than they've ever been. But they are $2,300 a piece. They currently don't pay out a dividend, but that's not really a big deal because when you look at the big picture and you see all the returns that Amazon's had over the last 5-10 years, they are a very good growth company and they just keep growing and growing. So even if you're not getting a dividend, you're obviously making that back in the returns that they've been giving all of their investors. Their current PE ratio is currently at a 94, so a lot of you guys might say that's extremely high. But then again, when you look at their returns over the last 5 years, they've had over 500%, and this is a big deal. You're talking 5 times your money in only 5 years, and that's what Amazon's been doing, and that's what's on the track record. So if you want to invest in a company that's going to see a lot of growth in the next 10 to 20 years, then definitely keep your eye on Amazon because they are not going anywhere and they just keep getting bigger and bigger. So definitely keep an eye on them. Now, if you just found this channel, I'm Jason with Honest Finance, and I make a lot of videos on different topics that'll give your life and your finances more value. So definitely subscribe if you guys are into that type of content. Also, if you guys want to get 2 free shares from Webull, I've got a link below. All you have to do is sign up for them. And then I'll leave another video here. This is going to be on the 3 best stock trading apps. So if you guys want to learn more about some different stock trading brokerages, check that video out. But thank you guys for watching. Have a great day.